Hey, welcome to the closing beat, everybody. Happy Monday. Well, that seems a little loud, doesn't it? I'm gonna leave it there just in case. But how we doing today? I spent pretty much too loud. Too loud. I spent the weekend a little under the weather, man. It's like I turned 40 and the warranty expired. I was telling the client earlier, man. The missus got COVID, and then I got something. I don't think it's COVID though. And so, man, I just slept and slept. Woo. So if I'm a little out of it today, well, I am recovering. I feel pretty good though, not too bad. Just sound a little funny maybe still. Anyways, what sounds funny is this market. We're going to cover that here today because that's what we do here on the closing beat. Last week, by the way, our Wine and Wealth class was about some tax tricks that maybe you've never heard about before. Tried to go a little bit deeper than just the sort of, rent your house out, all that stuff that you see on YouTube and stuff, to some of the more advanced topics. So we're going to continue that. Got good feedback on that one. I like doing that myself, and so we'll keep doing that as we go. Our FinTips videos this week, a little different way. We're going to kind of a randomness to go out there and try to see what you guys are interested in. We'd be interested in topics. If there's anything in particular you want us to cover, we don't have there's no catch, you don't have to pay us anything. We just ask for you to subscribe and everything. So if you check that out, that'd be great. But I think we should probably spend our time on the markets here today because there's a lot going on. So I'll do like I always do. Welcome, everybody, by the way. I'll do like I always do. I'll go through everything. I'll stick around, answer questions. If you guys have any questions, I think you do. I will. Yeah, you're kings. I do answer comments there and questions as I can. But let's start with this. I'm going to actually have to go over to the spiders because usually I show the futures, but I'm going to show this here. This is the SPY. This is a gap down, meaning that overnight the futures markets traded lower, and when the stock market opened, we were opening at this price, so much lower than Friday's close. Well, that's officially the largest gap down of the year. That's not really something you want to be excited about sharing, but largest gap down of the year and the largest gap down since COVID, March, during COVID there. So not normal and not good. We're officially in a bear market, by the way, because you would have to use the index. We'll go over to the index here and just do one of these deals. Just go from about the high to about the low. You got 22% roughly where we closed today. So down 22% from the highs. That's what that means. Anything down 10% is a correction. Anything down 20% is known as a bear market. So welcome to the bear market. By the way, there was no hiding today. Unless you happen to have 100% invested in Truist Financial, which, just for today would have been okay, or the CME group. There was McDonald's. Yeah, maybe McDonald's. Other than that, there was no hiding. Everything was down. And you're talking big declines today. NVIDIA, 7%. Big names, Microsoft, 4%. Apple, almost 4%. These are moves that you don't normally see. Visa being one of them there, down 3.5% on the day. Tesla, 7%. Big moves. Even I'll go as far as like a Procter and Gamble, 2.5%. That's not normal, right? Around earnings maybe, or if they have some recall or something, news-driven things. But just out of nowhere, very abnormal. And in fact, this consumer staple stock, so it's known for being really boring and stuff. AT&T, Verizon, Walmart, things like that, Coca-Cola. Look at this year so far. Wild down and back up and then down. Look at, these moves here. Not to stick on this for a minute. You got 13% up, right? After having, I don't know, what is that? 13% down, right? Massive moves. 13% down again. So not very normal there for these kind of things. And where people stand now is, what's the good news, right? You see the stock market fall and you go, okay, I have been taught, and rightfully so, that when the market falls, I should find a way to buy that. I should be aggressive. I should, try to use cash that I've been keeping on the sidelines. Not one of our clients is down more than the market because we've kept cash on the sidelines. Just nicely timed and everything, so happy with that. But now's the time you think about getting more aggressive. But is there a reason to do that? Can you give me anything? I've been saying this for weeks. Can you give me any reason to be more aggressive? You just can't. Now, good news, I didn't get to cover this last week. The inflation rate, well, it's not good news, but so inflation creeping up towards 9% there. But the good news here, if we put in core inflation, which is just taking out these wild gas prices and the food prices, if you take that out, you're actually starting to pull back. So that's good news. It's just a stretch. I think a lot of you would say that's kind of a stretch, but I'm trying to find something. So a little bit of a peak there in what's known as core inflation. But other than that, you look at the stock market and you go, okay, it's down, it's discounted. This is super extended in the short term. I'll cover a few stocks that are extended in a moment, but very, very extended. I'm supposed to buy, but why would anybody else buy here, right? For an investment, long-term play there. It's just not there, right? You've got the Fed coming up this week. Well, they were projected to do 0.5%. It's a given. They're going to do at least 0.5%. But now with the inflation numbers, they open the door for 3 rate hikes or 0.75%. And so I think, what was JP Morgan said that? Let's see. Let me go over here real quick. See if I can make this work. We're trying something out today. Hey, what was it? JP Morgan said about the 3.75 hike?
Yeah, they're anticipating that. Yeah.
Okay, so JP Morgan, that's the one in there. So they called it out today. They said, look, they're half points off the table. I don't know, right? You have to worry about the Fed being too aggressive and putting us into this sort of seesaw, well, what we're living through right now type of market and economy. So I don't know, but we're going to find out on Wednesday. And so maybe that's a reason that you say get excited. I don't know, right? I don't have anything that I could say to get very excited about. If you want to go back last week, you could actually see, we talked about how to read these stats on how much the Fed will hike rates or not. I think there's a 20% chance now that they are going to hike rates by at least 3/4 of a point. So that's, we got a wild week ahead of us and we're just getting started here. The NASDAQ down 4%. The good news is, if you don't have Bitcoin, today wasn't so bad if you compare it to that. Bitcoin falls 20% in one day. That's volatility for you right there. You've got a lot of exposure now where what appeared to be a good deal is now you're finding out to be fraud. And that's happening quite a bit, and that's putting a lot of pressure on crypto at the moment. That's got to go through. It's got to work its way through the system. I'm not and have never been a crypto fan, but boy, that 20%, that's a beating there. I don't know that I would like that. All right, looking around, let's move on. You got gold down let's call it 3% on the day. The Russell pulling back almost to new lows there. That'd be the strongest out of the group, only down 4.5%. Who's counting? I want to point out bonds. Whoa. Really, really sharp move in bonds. Biggest drop of the year, by the way. So that's not a normal move. I'm looking at the 30-year. We could go down to the 10-year if you want. That's the biggest drop of the year, which means rates just spiked and had their highest move of the year as we stand right now. That's a tough one to stare at there. Guess what? Crude oil still managed to stay higher on the day. It was a bit of a volatile day for crude oil, but no relief at the pumps, at least based on today's action there. So that's not very good news. Oh, a couple other things. China stocks continue to break out. So what I mean by that, it's one area of brightness there. There you go. It's a sloppy drawing, right? But you got a downtrend here that the Chinese stocks are starting to break out from, and a lot of people are looking for those pullbacks. Pinduoduo, Alibaba, and Li are the best performers since the breakout. So if you're looking for the leading stocks in that group, those three would be your ones to look at there. But you could use the FXI, which is the most popular, to see that sort of breakdown out of the downtrend if you're interested in playing the old Chinese markets over there, as they have been waking up. They did not walk away from what was the disaster that happened today in our markets. They were also quite lower. What else do we got? Nothing. Okay, let's move on. New highs and lows for the day. There were no new highs. There were 153 new lows. 1/3 of the S&P 500 made new lows today. The list was so large, 153 stocks, that I said, well, I got to find some reason why I'm sharing these stocks. So I put them in order. Check this out. Warner Brothers, 19% away from its 20-period moving average. It's just a fancy way of saying in the short term, it's very extended and not likely to continue that far that fast. Caesars, 20% away from its 20-day or 20-period moving average there. Very extended and hitting new lows, of course. That's what happened today. You got Norwegian Cruise Lines, 24%. Right? This gives you something to go into our research site and go, well, how often does Norwegian Cruise Lines bounce after being up or being down 20%, 24%? Carnival Cruise Lines, 25%, super extended here. And Royal Caribbean, they're all in the same camp there. This would be the most extended stock in the S&P right now that also made new lows today, down 26%. Now, I want to go over to something else real quick because I shared this with you before. I'll give you some stats. You're worried about the market a little bit here. I shared this with you before. It just didn't apply because the market didn't hit 20% down. We did this last week. When the S&P hits 20% down like it has, it officially has done it, what is the performance 1 month after? Do people buy it or do people run away? Does it get worse? Right? Just to go in the short term and just see, is there any relief in the short term? Well, here is every single move since World War II, really. And then we looked, every time we fell 20%, measure the next month and then stop. Then wait for the next time the market fell 20% off highs, measure the 1 month move, and then stop. So you can see the performance here. It is on average, it's up 3.82%. In other words, people try to buy the 20% dip. The last time this happened was in 2020 during COVID. We fell 20%. 1 month later, we were up 12. That was the sharpest on record. And, you lived through that. I was dumbfounded. You could watch the videos. I'm like, this doesn't normally happen, guys. 2009 up 10%. 2007, you can see there were only 3 times that had traded lower. And over the 1 month period, it didn't get that much worse, right? So when we fall 20%, typically we're in the range there, right? In fact, if you were to say, let's look and see when we fall 20%, even though 1 month later might have been higher, did it go further? The average move to the downside is just about 2%, right? So you might expect more downside. You could probably certainly see it. There's no good reason why the market should just turn around and go higher tomorrow. But on average, it doesn't tend to be too much worse. We've lived through the worst of it there. Of course, this time could be different, and so you never know. But I just wanted to share that with you because we covered it last week in preparation for this week. See what happened there? All right, stocks in the news, and I'll take your questions here. Duke Realty. Duke Realty is being bought out. They agreed to the deal, actually, with Prologis. It's all stock. Oops, wrong button. So it's all stock. Prologis is going to use all stock to do that. That's why their stock is lower on the day. 2 REITs making their way as one. Goldman Sachs. The SEC is looking into their ESG funds. You notice how Jazz Wealth does not participate in that? And that would be why. Because anytime something new comes up and the SEC says, yeah, go for it. And I'm not bad-mouthing them. I don't want no beef. But anytime they say that, they then follow up with examinations. The fact that they're being investigated is a poor choice of words. They're doing an audit, essentially. We went through one 2 years ago, and yeah, it's no fun. So that's why I just stay away. I'm like, you know what? You guys do what you got to do. When the dust settles, maybe we'll dip our toes into it, but I have no interest in that at the moment. That's why the stock was lower on the day. Speaking of brokerage firms, with stocks lower, I'm going to cover this tomorrow for you, but Schwab settles with the SEC for $187 million because of their Schwab Intelligent portfolios were intelligently investing for their benefit, not for your benefit. And that's my background. I come from that sort of logistical back end sort of thing. So on tomorrow's FinTips, I'll show you exactly how they did it, so you don't have to read the articles and go through all that. If anybody even knows how they did it, but I'll show you exactly what they were doing. It's not fraud. It's just they didn't spell it out correctly. So I'll cover that because they were making some money, and you didn't know any better. Got to keep an eye on your dough. All right, PayPal. Barron's was pretty excited about them. PayPal says they liked how Apple's competition with the buy now, pay later scenario there that they just launched. They like that competition. It's going to bring more eyeballs towards them and maybe a little more business towards PayPal. Voya in the news there. They are going to merge with Allianz, which is AIZ, ticker symbol if you're interested in that one. There's a lot of stuff moving around in the financial services space right now, and that's another one. And Tesla Larry Ellison's on the board. He doesn't want to be on the board anymore. He's not going to rerun for that. They're also doing a 3-for-1 split. That happened on Friday. That's not new news or anything. But I just thought I'd point that out to you. By the way, these splits, they seem more common now, but in fact, they're less common. Prior to 2008, it was not abnormal to see 30, 40, 50 splits in a year, in any given year. That was very normal. We're barely breaking double digits now. Since 2008, you're lucky if you get 10 splits in a year, or 10 stocks that offer to do splits. So, it seems a little bit more exciting because it doesn't happen as often. But there's nothing. It changes nothing, right? So don't let it do anything for you. All right, I'll take your questions if you have any, and then get out of your way here. You don't trust automated investing? Well, if you trusted Schwab and Intelligent Investments, they got one on you. They did good. Some smart people in that room. Yeah. Technically, it's a stock dividend, though. Which one are we talking about? Voya? With Allianz? I'm not sure what you're saying there. JP Morgan. So new lows on JP Morgan. Banks in general, right? You got like a 5% yield on banks now. Do you know that? I mean, this is getting out of hand here. I mean, attractive out of hand. Let me see what I can find for you, because this is starting to get a little crazy. Financials as a whole, if you didn't want to like guess and do all that stuff, financials as a whole, if we're using the large financials only, 2.2%, you're looking at 2.5% after today. Financials as a whole, the entire sector there, 5% yield, right? That's crazy. Real estate, over 3% now. Utilities, over 3%. I mean, granted, that doesn't do much now, but the short answer is, yeah, financials. You got to look at financials. Like the pullback in financials has got to be buyable here. I don't know that this is the bottom. I don't know that this is the best place to buy them, but that's got to be on your list. Okay, so Eli says, well, my automated investing account's performing the best. So do you care if it could have been performing a little bit better? I would venture to guess that most people don't care. What if your automated Schwab, let's say a Schwab Intelligent Portfolio, on a good year, the market was up 10% and you gained 10%. You're happy with that, but you could have gained 11.5. But due to some manipulation in the background, you made 10. You wouldn't care, right? I think the argument is Schwab didn't actually spell that out, right? Nothing wrong with a charge as long as you spell it out. But good for you, actually. So I'm happy about that. That's good. For GM, yeah. Well, they petitioned the Biden administration, too, to raise the cap on EV tax credits there. So that might help. You would think that would help Tesla, right? Tesla hits that cap every year. But I know the White House don't care much for Tesla. Yeah. You like Amazon be a buy around 100 or 50? Well, that's a wide number there. So you're saying I either buy it here at 100 or it falls 50% and I buy it there. I'll take the 50% discount. I don't think you're going to get it, though. Yeah. Oh, yeah. You mentioned on Thursday that this was a buyable pullback. Absolutely. Yep, it's a buyable pullback. You have to imagine, from everything you know about a 20% pullback, you've got to say this is a buyable pullback. You're in that zone. I did a class for clients a couple weeks ago where I showed how mutual funds buy in zones. They're not going to pick a price. They're not going to say, do I buy Amazon at 100 or not? They're just going to go, this is my range, 100 to 90 bucks. That's where I'm in. Every time it dips, they're adding more and more and more. Yes. Yes, yes, yes. Sir Francis, Schwab makes you keep too much cash in that smart account, but they don't invest it. They just leave it. You are onto something, sir. Tomorrow's video, I'll explain exactly what they're doing with that cash, which caused them to have to pay back accounts $187 million. It's not fraud, but there is a reason they're making you keep that cash there. Fascinating and clever, just not technically legal the way they worded it. Yeah, the tattoo's gone, man. It's all gone. I'm not totally unhappy. Yeah. Oh, I keep seeing this. The let's get Cody in on this here. The Celtics. That's a big game coming up.
They are in the NBA Finals. Yeah,
So it's the final. This is the team versus team,
this is team versus team.
and the
Yep.
Boston fans I keep hearing about. They're no bueno.
They seem to be a rowdy bunch. Yeah,
Rowdy bunch.
yeah.
Yep.
I don't watch basketball.
Oh, you don't watch? Oh, all right, well, there you go. Maybe we got a Boston fan there. Our town is hockey at the moment because that's right. That's all they're doing. It's the Lightning. Congrats to them, I guess. But yeah, that's pretty much anybody it's talking about around me. Being in old Tampa. Yep. Making money off your money. Making a lot of money off your money, man. I mean, it makes you sick because you're like, oh, why can't I do that? I mean, you can't. I can't. But, ooh, good thinking. Anyways, all right, we'll wrap it up from there. We will be back tomorrow. Do this all over again. I wish you a good rest of your day. It's going to be an exciting week, right? So thank you for watching and hanging out with us. You may want to check in throughout the week, not saying that to get you to come back, but it is going to be that exciting of a week. You got the Fed on Wednesday, and that's just going to get things rolling. So enjoy the rest of your day. We'll be back tomorrow, and thanks. See ya.